Welcome back to the podcast. I'm Kate.
And I'm Anna. And today we've got a bit of a different episode where we're actually doing an end of year wrap up. So speaking to our global business unit heads at RFI Group to talk about what they've seen in the research and kind of wrap up the year and make some predictions for the year ahead as well. So in a slightly different format, I'm actually going to be interviewing Kate as part of the podcast today. And then we'll go on to some interviews with Mark, Amit and Hubert, who are part of the RFI team as well. So for our listeners who perhaps don't know Kate to the extent that others may, Kate, do you want to actually introduce what you do at RFI and your role as Global Head of Consumer Credit, Deposits and Payments, what that entails and the types of research you oversee?
Yeah, absolutely. So for our listeners, in addition to being one of the podcast hosts with Anna, I'm RFI's Global Head of Consumer Credit, Deposits and Payments. So basically, I am responsible for all of the consumer research that we do that relates to specific products. So credit cards, other payments products like buy now, pay later, savings, mortgages, consumer lending, all of that fits within my remit. So I'm responsible for all the research we do on that globally, which is across a number of different markets, but quite focused on our core markets in Australia, the UK, Canada, and Asia.
And thinking about the last couple of years, we know how different the pandemic has made the landscape. And, we've looked at this in the business space, the merchant space, and, for the consumers, what do you see as some of the key impacts of the pandemics in some of the research that you've seen? And I guess thinking about the consumer group specifically, how do you think some of the impacts of the pandemic are making kind of impacting consumers in Australia or globally as well?
Yeah, I think it's been a couple of years of some really significant change. And I know that Mark and Amit, who are our business or SME and commercial focused business unit heads, they will talk a lot about what we're seeing from a business perspective. But from a consumer perspective, really, I think quite a significant shift in customer behavior, both around, I would say, channel and payments are probably the two key ones. So we've seen just this rapid digitalization in terms of how consumers are interacting with their banks. We've seen a shift to digital, but I think more specifically a shift to mobile. So if you look at a market like Australia, we already have really high rates of digital engagement in this market. But what we've seen is customers shifting from using online banking, so using a desktop computer or laptop, to using mobile banking. And that means that there's sort of a changing set of customer expectations. There's more banks need to do around onboarding and sort of helping customers through a digital experience. There's changing expectations around what an app will, what sort of features an app will have. So a lot that's changed in that space and will continue to change, I think, going forward as well. And then the other one is payments. So greater usage of contactless cards, greater usage of mobile payments. We've really seen the decline of cash speeding up over the last couple of years in every market that we're in. So these are pre-existing trends, but have really been accelerated by the pandemic. There's lots of other things that I think have changed as well, in particular things like the ways that we all work and interact with each other, but they're probably the two ones that I see from a consumer banking perspective.
Do you think that cash will be declining rapidly in the next couple of years, or do you see it sort of stabilize post the peak pandemic and is kind of naturally declining at the rate that it was previous to the pandemic, kind of making consumers need to rely on digital or card payments where shops weren't actually allowing them to use cash?
It's an interesting question, because I think whenever we get asked why or what stops customers from using non-cash payment methods, so contactless cards is a good one, there's sort of two things. One is consumer reluctance to change their payment behavior. Payments is something we do literally every day. It's very ingrained and habits, very ingrained habits in terms of how we pay. So just getting customers to see the benefit of changing their behavior is quite difficult to do, and I actually see that a lot with mobile payments. So customers who use contactless cards quite a lot don't really see the benefit of going from card to phone. So tend to stick with contactless cards in markets where contactless card acceptance and usage is quite high. But the other side of it is merchants and whether merchants are actually willing to let customers pay in different ways. So what we've seen throughout the pandemic, I think that's quite key is merchants starting to accept non-cash payment methods to a greater extent. So in a lot of markets you might have seen before, merchants preferring or pushing customers to pay with cash. And now we've actually seen the opposite. So there's, for example, there's a coffee shop down the road from me that doesn't accept cash anymore. So that's a big part of it. And I think that will definitely continue. So that helps to enable customers to pay in different ways. The decline of cash that we've seen over the last couple of years has been faster than we've ever seen before. And I think we can probably expect that pace of change is going to slow down. And in some markets, we have seen a little bit of a bounce back of cash, of customers going back to how they were using cash before. But over a longer term period, yes, we'll continue to see cash decline. Probably won't ever go away completely. We still see checks being used in a number of markets around the world. So I think cash will just sort of go that same way and be used by particular groups of customers who prefer it, but overall become a much smaller part of how we all pay.
So are there any other trends that you expect to have a lasting impact? So I've spoken about cash. Is there anything else that you think post-pandemic will actually continue, even when consumer behavior goes, not back to normal, to maybe closer to what it was prior to the pandemic?
I think that the digital banking is probably the other one, or that shift towards mobile. I think it's similar to that shift away from cash. It's customers who maybe didn't have a reason to use digital before, starting to use it in new ways and seeing the advantages of it. So I think once you have that step change, you probably don't go back. So that's probably another one that I think will be a lasting change.
Is there anything that you expected to see this year that didn't actually eventuate, or anything that you really, really expected that just didn't happen in the way that you thought, or to the extent that you might have thought it would?
Yeah, I was thinking about this. I think the big one for me is decline in loyalty. So last year at RFI, we did quite a lot of work around loyalty, and in particular, in a market like Australia, at the end of last year, we were starting to see things go back to normal, and we thought we were done with the pandemic, and obviously this year has proven us wrong. But I think what we were starting to see was this significant shift in the way that customers were thinking about their banking. So looking at customers holding more banking products outside of their main bank, using more banks in general, not caring as much about whether their products were with their main banks, the main bank being sort of less of a driver of choice as well. That's a trend that I thought was going to become really key throughout the course of this year, and I think maybe hasn't had as big an impact as what I would have expected. However, I think that will continue longer term if we think about that shift in digital and customers who aren't interacting with their bank face-to-face as much. If you look at why we've seen declining loyalty over a longer period of time, my suspicion would be it's because customers are now more digital. So they're not interacting with, maybe even it's thinking about interacting with the bank, but they're interacting with an app, and they're choosing the best tools and features because they're doing all of their research online. So I think that will continue. I think we're in a very competitive market at the moment, not just in Australia, but around the world as well. So there's a lot of competition in banking. There's a lot of innovation in banking. We're seeing this really significant in fintech usage and new providers coming into the market. Buy now, pay later is a really great example of new providers coming into the market and solving a real problem for customers and really driving significant change. So I think we'll see that happen, and also just with more fintechs, with more non-bank providers solving different problems for customers. I think that will mean that customers won't be getting everything from their bank anymore. They'll be getting things in different places. So maybe it means you have a bank account with a traditional bank, and then you use buy now, pay later for making payments, or you use a mobile wallet for making payments, and using just a variety of different types of providers. I think that's a key trend that we'll see globally over the next couple of years.
Especially as we see customers no more, like they no longer need to go directly to their main bank for all their products. Like you said, you can actually pick products that suit your needs specifically, whether that's buy now, pay later, whether it's an interest-free credit card, whether it's a loan, whatever it might be. There's kind of less of a need to just do a one-stop shop with your main bank, which I think is a really great change, where you can actually have products that are really in line with what you need, rather than it's the best you can get within the bank you've got that relationship with.
I think we're starting to see more partnerships as well. So it might be that you still go to your main bank and get all of these different services from your bank, but they're being provided by different people behind, or different institutions behind the scenes. So I think we're starting to see that increase in partnerships as well. And this idea of you don't need to do everything as a financial services provider anymore. I'm sure sort of big banks would still want to be doing everything, but if you're a smaller provider, or if you're a fintech, that probably opens up a lot of opportunities if you can do one thing really well and then partner with someone else who's doing something else really well, and provide your customers with a suite of products that meet their needs, but maybe actually aren't all provided by you. So it'll be interesting to see if that does eventuate. I think we're starting to see signs of it, but I think that would be another key one to be watching, maybe not so much over the next 12 months, but over the longer term.
And do you have a key prediction for the industry for the next, either in the next 12 months or the next, 2 or 3 years? Is there one thing that you can predict you see happening in the industry?
I think it comes back to that idea of customers starting to use different product providers, different services from different institutions, becoming less loyal. Maybe the sort of longer term trend or the longer term prediction would be the death of the MFI. So whether customers will still consider a bank to be the MFI, whether that will really mean anything. We'll see customers using just a wider range of providers for different services. The rise of sort of super apps and big tech getting into banking, or different parts of banking at least. I think that's going to be another interesting trend that we should really be watching and thinking about. And then the other one that I touch on is buy now, pay later. We, from an Australian perspective, have been watching this for a number of years now, and we're just starting to see it really pick up in other markets as well. I think that if you're a listener who's in another market, buy now, pay later is something you should really be thinking about in terms of how it has an impact on your customers longer term, especially if you're a traditional provider. And we're already starting to see the card schemes really thinking about what their response to buy now, pay later is already. But being able to sort of get in there and maybe create those solutions before third-party providers do is maybe something the banks and card schemes should be thinking about. But I think buy now, pay later is not just a flash in the pan. It's been around for too long. It's gaining too much traction. It's been too widely used in a market like Australia, I think, for us to say that it was just a fad. So the continued uptake of buy now, pay later in markets outside of Australia is another key trend that I think we can expect to see in the next 12 months and longer term as well.
It's a great point to end on, I think, just around what to watch and thinking about the role of the pandemic versus trends that have already been growing regardless. So whether it's the decline in cash, the rapid increase in use of buy now, pay later services for a range of different customers, not just a millennial customer, but an older customer, any customer for different needs. There's products to suit them, and the banks are competing with so many new offerings. So it's going to be really interesting to see what else comes out next year. And I know we'll be watching that quite closely.
Absolutely. I think what I would end on in terms of something like buy now, pay later is I think it often got underestimated at the time as something new and as just an alternative to a credit card, but it really solves a customer problem, and it's quite different to other solutions in the market. So I think that more of those types of solutions, we should maybe be looking at them a bit earlier on and thinking about what's the customer need that it's solving, and is this something that is materially different to what else exists in the market at the moment.
Absolutely. Well, thanks, Kate, for being on the other side of the no longer being the host and actually being interviewed for this segment today. And now we'll actually go on to the interviews that Kate and I both did with Mark, Amit, and Hubert, and then we'll give a little bit more information as to who these people are and what their role is at RFI. But thank you for joining this interview.
Thanks, Anna. Amit, welcome to the podcast.
Hi, Kate. How are you going?
Good, thanks. Do you want to start off by introducing yourself and your role at RFI?
Yeah, sounds good. So my official title's Global Head of SME in Commercial. What that means is I look after the SME commercial product within RFI. That's across the globe, across multiple markets, and primarily in terms of the research that we do. Also do a lot of the presentations to our clients. I'm based out of Singapore, so I deal with a lot of the Asian markets. I have been in Singapore for about 3 years, with RFI for just over 6 years now, I think.
Long time.
Yeah.
Well, we're going to spend a bit of time today chatting about some of the key changes that we're seeing in the market, but in particular from an SME and commercial perspective. So what I'll start off with is just getting you to give us a bit of a sense as to how the pandemic has impacted businesses over the last couple of years. There's obviously been a lot of upheaval, a lot of changes. What are the things that you're seeing in your area?
Yeah, I mean, it's a big thing to talk about, I think, with the pandemic, because the impact, especially for businesses, has been so varied, whether it be across markets, whether it be across industries as well. For me, I'm seeing, I can particularly bring in that Asian perspective around the Asian markets and what's happening. For me, there's three key areas. The first is around digitization of businesses. So their internal operations and digitizing what they do from an accounting perspective, from a day-to-day management perspective, and then also within that, I would say the shift towards online as a channel for business is really growing in prevalence, and that we all know about the growth of e-commerce in multiple markets. We're certainly seeing that in Asia, and a lot of the big e-commerce platforms have grown a lot, have got a lot of funding as well. So obviously a lot of smaller businesses are also tapping into that segment by necessity, and also to take advantage of the growth that's happening. The other area which is more relevant to banking, I know we're going to talk more about banking coming up, but the shift towards digital banking, I think that's a pretty obvious one. We're seeing on the consumer side of things, we're seeing it on the business side of things as well. Maybe not to the same extent in terms of the shift towards mobile first. I think the focus initially is to get businesses onto digital banking platforms, whether it be online, whether it be mobile banking. But we might start to see more of that shift towards mobile first as well in the business, and certainly in the SME segment as well. And the final one is more, I guess, big picture and macroeconomic, which is around internationalization of businesses. This is a theme that we're seeing in the news as well, with lots of different political factors at play. But the pandemic has really seen businesses think about their risk management in terms of the connections they have with other markets, what that means from a supply chain management perspective, and how much risk are they exposed to when things like the pandemic come around and they lose access to some of their supply chains. So I think we're seeing both at a macro and micro level focus more on the domestic or a shift towards the domestic sources for supply chains, and that's something we're seeing across multiple markets. Obviously changes to the supply chain and connections and corridors businesses are tapping into, which is an opportunity for banks as well, because of the changes that businesses are enlisting at the moment. So how do you support that, and how do you capitalize on those changes? That's the key at the moment.
Yeah, I think there's a lot of changes that are happening. I think the digital one's a big one that comes up all the time from a consumer perspective as well. What we tend to see on the consumer side of things is, of course, that shift towards digital has already been happening, as maybe it's been accelerated by the pandemic. Is that the same for business? Is it an acceleration of a pre-existing trend, or has the pandemic pushed that trend maybe in a direction we wouldn't have seen otherwise?
It's a bit of a push and pull, I think. We certainly were seeing more businesses move towards the online mobile banking space, but we're also starting to see it become more of a focus area for banks as well. So that's the supply side of things. Historically, I think we've seen banks focus more on the consumer side of things in terms of getting them to use digital platforms, whereas in the business banking side of things, it still relied very much on things like relationship managers and more of that face-to-face contact. I think because of the pandemic, it's become necessary to do things more and more online, and that's certainly impacted the business side of things. So it's kind of two-pronged there. I think the demand side certainly shifted, as well as the supply side from banks as well.
And the other one that you spoke around businesses sort of becoming more domestic focused, is that a change that you think is temporary, or do you think that will continue post-pandemic?
That's a hard one to say. I think it depends. I don't think it depends on the market, I would say, and I think it's more about changing supply chains. So certainly in the US, we're definitely seeing more of a domestic focus, in the UK as well. And some of the RFI stats certainly point to this, with more of a pull away from international linkages for certain businesses, especially in the smaller business segments. But then in Asia, it's a different story, because we're starting to see, Hong Kong and mainland China markets shifting their connections, but not necessarily becoming more domestic, but moving towards ASEAN as more of a focus area, for example. So they're changing their supply chains to the Southeast Asian markets because they perceive the conditions to be better in those markets. So it really depends on the market we're talking about. I think some of those underlying it's more about the underlying reason for doing so, which is better risk management for businesses. And I think that will continue on into the longer term.
And are there any other changes that you think we've seen in the past couple of years that are going to have a really lasting impact on the industry?
From a banking perspective, I think there's a few key things that we're seeing, and some of this is probably more on the consumer side of things. Disintermediation is something, Kate, you and I have been speaking about it early in the week as well, but it's something we're seeing on the consumer side with the rise of super apps, with the rise of buy now, pay later, with the rise of fintech providers that are eating away at various elements of the banking value chain. So I think that will continue to happen both on the consumer and business side of things. From a business perspective specifically, I think when we're focusing on SMEs and the funding gap that exists for SMEs, that hasn't really gone away. I think it's still a problem area across multiple markets. And we see this in the Aussie market, we see it in Western markets, of course, and I've been talking about it for a number of years, but it's prevalent in the Asian markets as well. And what an interesting stat for me is around in the Aussie market, which the IBA releases. It's a trend of how happy businesses are with the amount of financing they have access to. And it's interesting that happiness measure actually peaked in the mid 2010, so around 2015. It has been actually declining. So the funding conditions, you could say, have been getting worse for businesses in the last 5 to 6 years, which is surprising given the number of fintech providers that have entered into this space. So I still think it's a big opportunity despite all the sort of new players entering into the business lending space. And I think we are going to see more innovation in this space. We're starting to see this with buy now, pay later, particularly in the Aussie market, and that being applied to the business lending side of things. We know from RFI research that flexibility as well as the application process and easy speed of application is critical when it comes to business lending. And I think that's still an area that hasn't been perfected by any means, whether it be fintechs or the banks. So that's another key area. I think the final one for me is around trust. And again, it's something that's been discussed quite a bit recently around the fact that banks have actually, been able to maintain a great degree of trust with their with customers. This is both on the consumer and business side of things, but there's plenty of threats on the horizon. I think that the nature of trust is something that's changing at the moment. So I think the fintech and the new entrants in the market are finding ways to establish trust in a way that's different to how the banks have established it in the past, which is through longer term relationships, the history of banking, the face-to-face contact, and even branches were part of the fundamental drivers of trust. So I think that will start to change with the new players, and they'll start to do this with partnerships. They'll start to do this by actually getting banking licenses, and we're starting to see that in plenty of markets, including in Asia with Singapore and Hong Kong and the digital banking licenses.
Yeah, I think trust is a good point, because we think of trust it's very multifaceted. There's no really one thing that contributes to trust. And as you said, from a consumer point of view as well, we see trust being built by in-person relationships, but increasingly there is this idea of, well, these new fintechs are more transparent and they're more open around what they're doing and their fees are lower. So it's just building trust in a very different way.
Yeah, I agree.
Is there anything that you would have predicted happening in 2021 that hasn't eventuated? So for having this conversation 12 months ago, what would you have expected to happen that hasn't played out?
Yeah, and again, I mean, we take the banking lens. If I think about how we work, that has changed dramatically and very quickly, right? So when the pandemic hit, everyone most people moved to working from home. We started to utilize video chat and video functionality in order to do business. And I think that was a big surprise as to how seamless and quickly that transition happened. For me, the surprise is to not see that happen across the banking and financial services industry in terms of how customers interact with their banks. Certainly branches have had to, by necessity, either shut down or limit their functionality. But I think the extent to which video, as well as things like live chat being used in banking, hasn't been as prevalent as what I expected it to be. I mean, you see it for some certain fintech players that leverage it, but and certain banks certainly have started to leverage it. But yeah, particularly in the Asian markets, I haven't seen it sort of really take off, which for me has been a bit of a surprise. Maybe it's a longer term thing that needs to happen, and maybe it's more the supply side with banks kind of facilitating it more so. But I think that's an interesting one that we need to keep watching, but hasn't quite eventuated the way I expected.
Yeah, I agree with that one. We've been talking at RFI for years about live chat and how it solves a customer need, and it just doesn't seem to have translated for some reason, and whether it's not being presented in the right way to customers, or if it's customers just aren't there yet. But I would have thought as well through this past couple of years that people were using Zoom and chat and Teams, and that would start to drive a change in behavior, but maybe we're just not there quite yet.
Mm-hmm. Yep.
And thinking about as we go into 2022, what are the key trends that you're watching? What do you think we should all be aware of and following as we go into the new year?
Yeah, and again, taking the business banking lens here, I mean, I've talked about some of the things that are going to change for businesses, but from a banking perspective, I think the focus is going to be around businesses. So if we look at the context at the moment, more of the macro picture, it's a low growth environment at the moment with banks struggling to find sources of revenue and margin as well. So I think SMEs and commercial banking represents one of those growth opportunities going forward. But I think that's quite big picture. It's going to be within that, the segments or pockets of growth that we're going to see. So whether it be underserved segments, and I know recently we've been looking into research within RFI around female SME owners and the differentiated opportunity that exists within that segment, and the fast growing, more of a digital segment in that female SME owner segment. But also if you cut across industries as well, due to the pandemic, we've seen there's been winners and losers, right? There's been businesses that have thrived, particularly in the digital space, but then there's been industries that have struggled as well, those that have been shut off due to the pandemic. So I think for banks, it's about, yes, focusing on the broader growth areas, which is around business banking, certainly. And then within that, how do you find the pockets of opportunity around the various segments and the differentiated growth that's happening?
And what would be your number one prediction for the industry over the next few years, either from a business banking perspective or more broadly?
Yeah, predictions are always difficult. I think the one that's, aside from some of the ones I've talked about, I think the one that's pretty clear to me at the moment is the emphasis and importance of sustainability within banking. I know we're seeing this more broadly, and again, taking a global picture is always challenging because there's differences across regions and markets. I think the EU is certainly kind of at the forefront when it comes to sustainability initiatives and that being part of people's decision making as well. Other regions are starting to catch up in terms of placing more importance on this, whether it be Australia, New Zealand, and even some of the Asian markets as well. So banks sort of need to keep up with that. And the interesting way to look at this is, when we asked in our surveys how much importance do you place on sustainability and ESG factors when it comes to choosing your banking and financial services provider, it typically ranks quite low. But I think that's the wrong way to look at it, because the other way to look at this, and something we do ask, is which brands would you avoid if they did not have ESG credentials or were supportive of sustainability? And that's when it becomes one of the top 4 factors when it comes to brand avoidance. So I think that's going to continue to become more and more important. And the final factor there for banks is when you're supporting ESG or sustainability, it is about being authentic rather than coming across as an institution that's just ticking boxes here in terms of meeting the bare minimum requirements. It's more about the tangibility of what you're doing and then proving that to customers. I think people really do want to see that.
It goes back to that idea of trust and transparency as well, and meeting customers' needs and showing that you're aligned to their values. I agree, it's going to become much more important going forward. hopefully in 12 months, we'll be talking about all of the amazing ESG initiatives the banks have brought out over the course of 2022.
Yep.
Well, thank you so much for joining us today. It was great to have a chat.
Good stuff. Thanks, Kate. Thanks for your time.
Thanks for joining us for this discussion today, Mark. So Mark Schultz is RFI's Global Head of Business Payments, and today we're going to be discussing changes in the industry and future outlook for the year ahead. But before we do that, Mark, can you tell us a little bit about your role at RFI and your role that is focused on business payments?
Yeah, sure. So I oversee all of the research that we run at RFI that covers business payments more broadly, and specifically the two sides of that being how businesses pay other businesses and those accounts payables, and then the flip side of that being how businesses are paid by their customers, and with a particular focus on that side on merchant acquiring.
Great. And I guess starting off, it's hard to avoid talking about the pandemic and the last 18 to 24 months. So could you let us know how do you expect the pandemic to impact businesses and all merchants longer term? So I suppose thinking about how they've already been impacted and then potentially some of these flow-on effects beyond the pandemic, unless there was another strain next year, which hopefully there's not. But, what do you see some of those longer term impacts to be in the business and merchant space?
Sure. So I'll start on the merchant side. And as you can imagine, one of the biggest impacts of the pandemic was, of course, the lockdowns and the inability for customers to go and shop in person. And so we've really seen this really significant shift towards e-commerce and online sales, online payments. And it's not something that in markets where we've started to see those lockdowns ending and life returning, if not to normal, then our new normal, I guess. We haven't really seen a return to those pre-pandemic levels for e-commerce. So it does suggest that we're seeing a bit more of a long-term shift in how consumers are shopping, how they're choosing to make those purchases, and perhaps a bit more of a long-term shift or skew towards online sales, even once consumers have the opportunity to go back in store. In addition, on the merchant side, over the course of the pandemic, one of the, I guess, silver linings has been that merchants have really started to pay attention to their payments acceptance needs and really focused on streamlining, optimizing, being really aware and paying more attention to the fees that they're paying, the costs they're incurring, the value they're getting for that, and potentially making some more informed decisions around payments acceptance than they were required to prior to the pandemic. So we're potentially seeing a bit more of a savvy merchant emerging in the wake of the pandemic, and hopefully something that we'll continue to see looking forward is a continuation of merchants that are a little more aware of what they want and what they need, and looking to providers to fill that. On the business payments side, really the pandemic has accelerated a lot of longer term trends that we were seeing. Things like, similar to the consumer side, long-term but slow falls in cash usage, check usage, a shift towards electronic payments, a shift towards card payments. So not necessarily anything net new in that regard, but massively accelerating those longer term shifts. And while we have seen potentially some rebound, it does appear that we're starting to see things moving back towards trend in that regard. The other big change that we've seen as a result of the pandemic, obviously, is an inability to travel and potentially returning, now that we're starting to see borders opening up, a bit of a resumption in business travel. And that's particularly important when we're looking at things like commercial and corporate cards, and specifically T&E cards, and a return in the importance of those travel benefits potentially to where we were. But one of the things that we're going to be tracking very closely is this shift that we've seen and increased comfort with video conferencing, and on the back of businesses effectively being forced to use remote working and remote meetings, whether we are going to see travel playing as important a role post-pandemic as we did pre-pandemic. So those are probably the biggest impacts that we'll be watching that may have really long-term ramifications.
One of my questions was going to be around if any of these changes will be temporary, and that's an interesting one around the role of video conferencing. So speaking to your bank potentially, or your lender or your card provider through a video call, it's going to be an interesting one to see if customers, once they can go back to face, if they'll be straight back to where they were, or if actually they're enjoying the convenience of being able to be at home or in the office, or even when they're traveling, they can still maintain that dialogue with different providers without needing to wait for a face-to-face appointment. So that's definitely one that I imagine you'll be keeping a close eye on.
Yeah, absolutely.
Is there anything that you expected to see this year that didn't eventuate? Thinking about last year was quite a new environment, and this year there was different kind of increases and decreases of the pandemic and various lockdowns depending on which state you are in. Was there anything that you did expect that didn't actually happen?
Yeah, I remember thinking back in 2020 that, well, if you cast your mind back to the beginning of the pandemic, no one could have predicted exactly how long it would drag on. And I remember quite clearly in that March of 2020 period where the world was starting to go into lockdown and everyone was predicting, a month, this COVID thing's going to blow over. And then towards the end of 2020, that's when they were predicting that this whole pandemic thing, we were past the worst of it. But we never just quite seemed to get there. Delta came out and restarted everything. So I had expected business travel. I'd expected to be where we are now in terms of business travel starting to look like it was making a return or potentially making a return. 12 months ago. So I thought 2021 was going to be the year where we started to see that resumption of business travel. But now it's looking increasingly likely that'll be 2022, knock on wood. But again, I think if the pandemic has really taught us anything, it's that things that you don't expect will come up and throw out your long-term plans and predictions. So I think we're just going to have to wait and see. But I think, a lot of things were put on hold. A lot of things were put on the back burner as a result of the pandemic. And as it's dragged on, I think a lot of those things that we had thought we would see in 2021 have remained on the back burner. So I'm hopeful that 2022 is the year where we'll actually start to see those things becoming priorities again as we eventually emerge from the worst impacts of the pandemic.
Yeah, here's hoping. Do you see any changes in the reward space? So you mentioned travel, business travel starting to resume. Do you see that business card holders, particularly in the more premium space, will go back to traveling the way they used to and engaging with the rewards in the way they used to? Or do you think the rewards landscape is never going to be quite the same as it was?
Yeah, it's a really good question. And one that we have been grappling with in our research is what importance. Obviously, travel has taken a significant hit, and a lot of the benefits in the T&E space have been really geared towards facilitating that business travel. So looking at things like airport lounge access, things like priority queues have not been relevant for some time. So I think it comes back to that point around video conferencing and what this new business interaction landscape is going to look like. I think we will see an increasing engagement with travel rewards, but it's whether we're going to return back to that pre-pandemic level or not is what remains to be seen. The other trend that we've been tracking over the past 18 to 24 months or so has been a bit of a shift in the attitude towards loyalty more broadly, because there has been such a skew towards travel as effectively the primary way that businesses can derive value from loyalty points. We've seen a bit of a shift in preference because they can't get the value from travel, a bit of a shift towards cashback and rebates, and a little bit towards other types of loyalty as well, ones that have remained relevant throughout the course of the pandemic. And so what remains to be seen, and again, something that we're tracking closely is whether we're going to see some of that sentiment returning to the travel space, or whether businesses are going to remain looking for something that's a little broader, a little easier to generate value in any given circumstance, versus something like travel, where if you're in a situation where you can't travel, then there's very little way to generate value from that.
Yeah, the reward space is such an interesting one, and loyalty as well. I know we're tracking it in the consumer space as well, and it's just something that, particularly in such a ever-changing kind of landscape, thinking about, can you encourage customers to stay with providers, or is it just they're going to be looking for the best deal or the best offering or anything that, you know, meets their needs, particularly in the credit space where perhaps they're leaning on credit more so than pre-pandemic, or, you know, if they're in the hospitality industry, I'm sure they've been facing different types of challenges compared to maybe a cleaning company that, you know, has never seen such business.
Yeah, definitely. And what potentially the other way we could go actually to the other end of the spectrum, and one of the things that we have seen in travel loyalty that was, I guess, a glimmer of hope was that businesses and even consumers in various markets were saying they were happy to hang on to their loyalty points because they knew that even if they couldn't predict exactly when it would be, there would be an end date on the pandemic. There would be a time when borders reopened, when travel would resume, and they're going to have a hefty balance of points ready to cash in for that big international trip. So we're not quite there yet, but I think there is a scenario where we could see, you know, quite a elastic band effect and this rebound back towards engagement with travel loyalty as they look to cash in on that value and those balances that they've been building up over the past couple of years.
Absolutely. And we've spoken about a number of different changes in the industry. Do you have one number one prediction for the industry in the next couple of years, either for 2022 specifically, or maybe more broadly the next, you know, 2 or 3 years?
Yeah, if I had to narrow it down to one thing to look out for, or one prediction, I think it would be this demand for innovation, and particularly in cards, but more broadly around payments. And I think that incumbent players will really need to keep pace with innovation, or else risk being left behind. So payments, and this is also true on the consumer side, payments is always where we've seen the weakest importance or the weakest impact of existing relationships and the highest willingness of consumers and businesses to look to fintech or look to other providers to meet their needs in payments. And so as we're seeing this evolution of the payments landscape and more innovation coming in, innovation in cross-border payments, things like virtual cards being rolled out quite broadly, I think that we really will we'll see significant demand from businesses, both in terms of making payments as well as receiving payments. And it's not just challengers and new players that need to be innovating. It's going to be the incumbent players in markets that need to keep pace with that innovation if they're looking to retain customers and remain competitive.
Yeah, innovation kind of ties in with everything we've spoken about as well, thinking about loyalty and retention and acquisition and meeting the needs of businesses and merchants. So I think it's a great prediction, and I know there's going to of really great research coming out next year and how businesses are feeling, what they're doing, how they're making payments, etc. So thanks so much for your time and for answering those questions and sharing your predictions.
Yeah, my pleasure. Thanks very much.
I am joined by my colleague from the UK, Hubert. Hubert, welcome to the podcast.
Hi, Kaden. Thanks for having me today.
Do you want to do a quick intro as to your role and what you do at RFI?
Sure, Kate. So I joined RFI back in 2014, and over the years at RFI, my roles have changed quite a few times actually. In my current role, I head part of our research, so we're consumer and digital research across 26 different markets. So as part of this, we run a number of large global tracker studies looking at consumers' usage and attitude to retail banking, but also looking at digital innovation, digital banking, and all of the new things and emerging technologies that we see in retail banking globally.
And obviously a space where we've seen a lot of change in the last couple of years. What I'd be interested in getting your perspective on, how do you think that the changes that we've seen in the last couple of years, in particular around digital, how are they going to impact on consumers longer term?
Sure, I think the digital space is obviously very interesting because we did see some changes obviously for a number of years prior to the pandemic. Pandemic gave the changes that we saw a huge boost really. So one of the biggest ones that we've seen over the last few years was obviously the shift away from physical channels onto digital. So that's not something that obviously been started by the pandemic. It's a trend that we had seen for a number of years prior to it. But what we've seen since then really is that the pandemic itself has accelerated this trend quite substantially. And I think the direction we're heading right now is probably reversible in many ways. We can see a huge and growing appetite among consumers for digital services. We know that the expectations of banks have been increasing in this area as well. So they no longer only expect banks to be able to allow them, the everyday banking journeys to be taking place fully on digital channels, but increasingly they want those channels to support them in their money management, which I think it's one of the key and biggest trends that we have seen in the last few years. And I think this is something to be welcomed by banks, because obviously the fact that this is coming from consumers, this is driven by consumers, means that banks can really focus on this digital channel and building those journeys. Lower reliance on branches removes one of the biggest overheads for banks as well. We know that branches are one of the biggest expenses of retail banks. So the fact that consumers are using digital services really justifies all of that investment going into those channels. But also looking at the broader financial ecosystem, the fact that consumers are moving from physical onto digital. And when we look at that from the perspective of new entrants, fintechs, neobanks, we know that traditionally the branches was one of the key barriers to the growth. So the fact that consumers are themselves moving away from branches and really going into the direction of greater self-service allows those banks as well to enter this game and really challenge some of the incumbents in the key areas. If you look at those changes as well over the last few years, I think the other one, also something that we have seen taking place for a number of years prior to the pandemic, but something that was further accelerated over the last 18 months, was the decline of cash. So dramatically accelerated during the pandemic. We did actually expect cash to bounce back when the lockdowns finished around the world. Or we just felt that when economies reopen once again, and the reliance and usage of cash will go up. And we did see some bounce back in certain markets, but that bounce back again dropped back, and that trend that we saw prior to the pandemic away from cash and onto digital payments, mobile payments, is accelerating once again. And I think payments as a space is probably in the area where we see some of the greatest innovation taking place. So if you look at the last couple of years, we obviously saw a number of new payment mechanisms being launched around the world. And looking at the last, it's not really 2 years, but it's really the last 2 years when we saw this extending into the mass market, the buy now, pay later technology and the buy now, pay later proposition really. We see these providers emerging around the world and quickly capturing the market. And we know that credit generally is a very profitable revenue stream for banks. And the shift that we're seeing in this, and credit generally has been quite conservative. Consumers, the way they borrow generally was very conservative. We see this changing very dramatically around the world. And the fact that consumers are turning to these non-traditional lenders for their credit needs obviously poses a challenge for traditional providers, given the importance of credit to them. And seeing how innovation is progressing in this area, I would not be surprised if 2022 brings more innovations in this area. And when we see new payment propositions being launched. And thinking about some other trends that we saw, so obviously the early months of the pandemic, we did see shift in the bank's behavior. We also saw shift in consumer expectations of the bank. So in the early stages of the pandemic, we saw consumers expectations, but also we saw consumers shifting their attention to how banks behaved in those early stages. So we know there were expectations basically among consumers for banks to reassure them that the money remains safe. We also saw consumers wanting banks to support those who were financially impacted by the pandemic. And as those early impacts and expectations of consumers have subsided over the last 6 months, we saw this changing or evolving expectations of the banks spilling over into the area of CSR, sustainable finance. It's not something that consumers necessarily see as a driver of choice globally, but they are becoming increasingly environmentally aware, and they want their banks to play in this area as well. So we saw demand for features allowing consumers to understand their environmental impact gaining traction in several markets. We saw banks also becoming, I think, increasingly aware that this aspect is becoming important across the board, but important in particular to the customers of tomorrow, so younger consumers, Gen Z, and they are playing a much more active role in this space. And I think looking at and into 2022, I think that the area of sustainable finance will become maybe not mainstream, but I do believe that we see some new sustainable finance product launches taking place in 2022 and beyond.
I think just reflecting on what you've said, there some really significant changes around the way consumers interact with their banks and also their expectations of their banks. Given all of the upheaval that we have seen over the last couple of years, are there any changes or any trends that you think are temporary, things that maybe banks or other providers in the market don't need to factor in terms of what might change in the future?
I think in terms of the temporary trends, the aspect of trust, for instance, we knew that this was always something that was important to consumers, but it was very much a hygiene factor. And I think the last 18 months we did see in many ways a flight to safety. It's not maybe that common in Western worlds, but perhaps in Western developed world it was manifested by a temporary drop in the openness to use new providers. There was so much uncertainty at the time that consumers just simply preferred to turn to more established players. But when we look at some of the emerging markets, when you have a very clear distinction between the old banks, banks are often owned by the state and backed by the state, and banks that are in private hands. We did see across a number of those emerging economies, consumers turning to those larger and more established banks. And I did speak early on about the fact that consumers are moving away from branches. Actually, in some of those markets, the importance of branch has actually increased during this time. Even though consumers were still moving away from branches onto digital channels, the fact that they could bank and they could choose a provider, they had a wide branch or physical network, gave them that extra reassurance. So although I still believe that trust to be an important factor, I believe there's will be an important distinction between traditional providers and new firms or new entrants. I think some of that initial impact and shift in importance will probably subside if it hasn't yet.
Yeah, I think it's a good point. Branches aren't just about access, they're about the message that they send to customers and that reassurance that your bank is there and you can go and talk to them if you need to. We see that, I think, in our data quite a lot, right? That the customers might not use branches, but they like the idea of them being there just in case, which of course creates a challenge if you're trying to maintain a branch network that customers are using less and less.
Absolutely. I think the aspect of bank being there in case customers have problems, I think that was always there. But I think, again, something that has been brought about by the pandemic, maybe not, obviously, it's something that predates pandemic, but what we saw over the last 18 months is that we know that generally there were a few banking activities that consumers often prefer to conduct via branches, via call centers. Whenever consumers had any issues with their accounts or with their products, they needed some extra advice. They wanted to apply for more complex products, such as home loans, loans, resolve any issues. They generally preferred to go to a branch. But what we saw over the last 18 months, there was again an acceleration, a very significant acceleration in the uptake of these new digital support channels. So things like live chat services, video chat services, consumers are increasingly shifting onto those channels. And whereas in the past they were only using them to, resolve some basic things, now they are more willing to use them for the things they previously turned to branches for. And I think this is a really important trend as well, both for traditional banks, incumbents, but also for new providers that simply do not have that branch network.
Absolutely. Is there anything that you thought would happen in 2021 that you haven't seen come true? Any predictions that you would have had last year which haven't come about?
Perhaps I expected the demise of online banking to move faster than has so far. One of the things we observed throughout the pandemic, so obviously the fact that consumers were moving away from physical to digital channels, that was to be expected. But the fact that many consumers actually still turn to online banking, actually in some of the markets, we saw consumers who moved away from branches because branch networks were reduced access, they're running on different operating hours. Many of those consumers actually went to online banking services. So in many ways, it wasn't just the mobile banking that benefited throughout the pandemic. In many aspects, in many places around the world, online banking also saw an increase in activity. And it's not just in certain, less developed countries. We saw that in Western world. So we, in Britain, for instance, we work with a number of largest banks. So we know that many of them did see an increase in the uptake of online banking services and online banking interactions during this time. So I don't think that this is a trend that will stay with us. I just think perhaps because consumers stay at home during this time, maybe the idea of banking on the go, that obviously mobile banking is made for, to some it was less appealing and there was simply less need for that. So that increase in online banking interactions, while I think it's temporary, the fact that it occurred since the start of the pandemic was surprising to me. And I think the other one, also looking at the area of innovation, the aspect of open banking. So obviously there were a lot of hopes in the countries when open banking was launched. So you're looking primarily here at Europe, for instance, at the UK. Open banking was believed to actually open up the services to new entrants, and it did in that sense. That new providers, that new innovations being launched pretty much, maybe on not daily basis, but not far from it in the UK. But what it hasn't changed is that it hasn't really enabled more competition in the market, in the sense that the incumbents who had a very tight grip on this market, there was very little shift in the market share. So although we did see innovation coming and new entrants emerging, third parties joining the play, we saw fintechs, neobanks. Many of those fintechs were actually, neobanks were actually quite successful in gaining customers. But when you look at the primary banking relationship, that still firmly lies with traditional banks. So in that sense, really, open banking has not been a game changer for the industry. And if you look at the uptake of open banking services among consumers, although we did see it climbing quite steadily, consumers still often remain quite reluctant to share the information. They don't see yet the benefits of open banking. So I think to an extent, it's perhaps a reflection that open banking hasn't been marketed particularly well in this market, and the consumers are still not aware and what it can do for them. They're still not aware of all the benefits that it can enable.
Do you think that will change? Do you think we'll start to see open banking gaining more traction in Europe, or is it kind of too hard to go back given the way it's rolled out and that lack of consumer awareness, lack of consumer understanding and even demand for those services?
Yeah, so we did see that awareness has been increasing, but it is a very slow process, I would say. I think, Kate, that if you look at Europe generally, particularly if you look at Western Europe, consumers are quite conservative in their behavior when it comes to banking, when it comes to using providers. So they're happy to try new technologies. They're happy to try fintechs. But open banking in the eyes of many consumers is just too complex. They just simply don't recognize what they can gain. And the idea of sharing information with third parties, although, all those third parties need to be regulated, it's still, it's still really scarce some consumers. So although we see, on one hand, you have openness to new technologies, openness to innovation, or even demand for innovation, coming really to the center of consumer expectations and the needs. But on the other hand, we can still see when it comes to innovations like open banking or sharing information, many consumers remain quite adverse to this idea.
Yeah, I think it's a challenge that many markets around the world are going to have to face into over the next couple of years as well. And what would be your number one prediction for the industry for the next few years? You've spoken a lot about some of the key trends that we're seeing, the key shifts that we're seeing in the market. What's the number one thing that you're expecting to see?
So innovation, really. Both, I think, product innovation and channel innovation further strengthening its position as the number one priority for the industry. And I feel this quest for innovation will produce more partnerships between incumbents and third-party providers. And I think those partnerships will benefit really both sides. So for third-party providers, it will allow them the platform really to get those solutions to the mass market. It will help them democratize those offerings. And for incumbents, it really gives them access to very powerful platforms that have been tested, and they know that they can use, and then they know they can apply. And all those innovations, obviously, it's something that consumers should welcome, because looking at both the capabilities of new entrants, looking at the product propositions as well, it's bound to increase consumer choice in the market, and that's something that we should all involved in that industry really welcome. And I think looking at the product innovation, so the pandemic has really disrupted many of the traditional drivers of bank revenue. So I really expect banks to become much more creative in looking for new revenue drivers, looking for new revenue streams. And I think this quest for product innovation will provide new solutions to consumers of products and services through mainstream banks that are not currently offered today. And this is perhaps one area, but the other one as well, I mentioned this briefly early on, is this whole aspect on and focus on CSR. So we know that banks around the world are looking for a differentiation. They're trying to create unique brand identities. They're trying to appeal to the customer of tomorrow. And I think many of them identify the aspect of CSR, sustainable finance, as the one they can use to that end.
Yeah, I think that one just keeps coming up at the moment. So it seems like something we'll see a lot more of over the next couple of years.
Definitely.
Thank you so much for your time today.
Thank you very much.
Thanks for listening to this episode of the Global Digital Banker podcast. You can find us on iTunes, Spotify, and Podbean.